Good morning, everybody. Welcome back to the Opportunistic Trader. Active morning. Nasdaq's under pressure here, down 1.25%. Looks like Apple selling here, down over 3%. Amazon's down 2.5%. So S&P's roughly flat, but it's really Nasdaq under pressure here. We're joined now by Phil Flynn of the Price Futures Group and Fox Business Contributor. How's it going this morning, Phil?
I'm doing great this morning, doing good.
So we got an active week. We've got elections tomorrow. We've got a Fed meeting on Thursday, and we've got volatility above 20. So a lot going on. And crude oil. We just had sanctions. Iran's a key player right now, and a lot going on with that. So let's talk about all those issues. Let's start with oil.
Sure.
Actually, what's going on with Iran?
Oil prices obviously have gotten crushed here the last couple of weeks, partly because there was a belief that that we would give sanctions to some countries on Iran, and that's what happened basically. And so we've got some waivers on 8 different countries when it comes to oil, and that, though, to me, is actually not that bearish. I think it's kind of bullish. I think one of the reasons why they're giving sanctions is because of the inability of the Trump administration to find additional barrels of oil for these countries. And I think that that's a reminder of really how tight the global oil market is right now. Now, it does seem like we had a situation where a few months ago, everybody was buying the rumor of the Iranian sanctions. Then everybody was buying into a slowing economy and that the Iranian sanctions didn't matter, and we crashed. And now we're in a new month, and we're in November. The hedge funds started to get short last week, probably a sure sign the bottom's in. And now I think the buying's going to start to come back in as the reality of the situation starts to settle in. So I think at $77 a barrel on oil, we were too high. I think the sell-off was probably too much, and we're probably going to end up somewhere in the middle over the next couple of weeks to see how demand goes.
Yeah, sounds good. Well, it's definitely been all over the place. We now have crude oil at 63.42. We had that big sell-off last week. We're up 25 cents now. We've had a decent range here, $1.30 or so. So, definitely keep an eye on that. What do you think this week with, obviously, we have the inventory reports as normal. What's the next big catalyst, do you think, for energy prices here?
I think it's going to start coming down to the inventory numbers. Okay, we just got a report from Genscape. They showed a big build in Cushing, Oklahoma over the last week. That has been a negative factor for oil. It's probably one of the reasons why oil pulled back off the highs a little bit. But people have to realize that build that we're seeing in Cushing, Oklahoma, really is getting supplies in that spot back to normal. And that's probably going to change once some of the big refiners come out of maintenance. So we feel that once the Whiting, Indiana refinery starts coming out of maintenance, we'll start to see draws there. But I think the market's going to start looking at inventories very carefully, because we're going to have to find out whether or not there's enough oil in the market to meet demand over the next few months. Now, the Trump administration keeps telling us there's plenty of oil out there. The bearish people out there are saying there's plenty of oil out there because demand's going to fall off the map in a few weeks. But then we've got, take a look at natural gas today. We had a huge pop up on natural gas because of cold weather. If you look at heating oil supplies, for example, they're well below average for this time of year. So if you get some cold weather early, that could be supportive to the market. So I would say, just in general, we're probably a lot closer to the bottom than the top on this market. And I think we'll see resume buying into November and to the end of the year. So we're looking for a pretty strong rally to finish out the year for oil and the products.
Yeah, sorry about that, Phil.
No
Now, what about Nasdaq under pressure here today? What are you thinking here with equities for the week? Volatility up, election this week. It's Nasdaq under pressure today. S&P is roughly flat. What are your thoughts here?
It is. I mean, some of these earnings, from the FANG stocks, it was carrying the market over the last couple of months. They haven't lived up to expectations, and there seemed to be a lot of fluff in those prices. But what we have found on other pullbacks in FANG stocks, at some point the buyers are going to come back in. It's kind of funny. A few weeks ago, we were writing off Tesla, right? Everybody gave up on Tesla. I did myself. I was a long-term buyer of Tesla, from about 80 a share, and I dumped out of it because of all the madness. And you saw that market start to come back. Apple, I think some of their unit sales were a little bit disappointing. One of the things that I've been concerned about with Apple has been, they really need some type of new product. Right now, the bulk of that company is selling iPhones, and if the iPhones don't sell, their numbers aren't going to be very good. So I think with their cash, it's probably a good time to start looking at picking up, some kind of a new dynamic to start feeding the profitability of the company, and they have plenty of cash to do it. They're sitting on tons of it. I think it's time that they do that to reinvent the stock. Listen, we
You
know
think for the
Apple's
most part it's where Apple goes, whereas the Nasdaq goes?
no, and not necessarily. I mean, there's no doubt that Apple is a big part of what's in the overall uh, the FANG stocks. You've got your Apples, you've got your Amazon, you've got all the FANGs. I think any one of them on a given day can give us a break. But, I know what we know. There's a lot of people that want to be long these FANG stocks. And I have been waiting for, some weakness in these stocks to get long. So we don't think that right now that the numbers that we're seeing here on the quarter have been that terrible where people won't come back in and start buying this stock at the right level. So maybe we need a bit more of a correction, but then we think the buyers are going to come back in. So we're not looking at this as like, oh my gosh, the FANG stocks are dead, or just because of one or two stocks. We think overall it's probably just a much needed correction, and we think the outlook for FANG stocks really looks strong next year.
Yeah, well, it's interesting. Overnight there was a HBO piece with President Trump and Axios talking about how he might look into antitrust violations between Google, Amazon, and Facebook. And pre-market, they really didn't move on it. These were roughly flat, but now we've got Amazon down 3.5%, Google down 1.5%, Facebook down 1.5%. So, in addition to Apple underperforming today, those are definitely weighing on the broader industry. And those are the names that have heavily outperformed for the year.
Yeah, I think, if you look at some of those names, obviously the political pressure is rising on them, whether it comes to how they handle the election. When you talk about Facebook, when you talk about Google, with the walkout last week because of the way they treated executives. And how they handled sexual assault complaints. I mean, that went way down the market. The fake news, that we're seeing on social media. And, how do you do that? And at what point, who's making the determination of what gets to be seen and doesn't get to be seen? And there's definitely a concern about the political bias that every one of these firms have obviously shown, according to any measurement, and influence election. So, I mean, I think that, we keep talking about Russia and their ability to impact the election, or some of these other players. But I mean, when you look at the size of the Googles and the Facebook, when they can determine basically what you see when you put in a search that you think is unbiased, and they show biased results, they deserve to be investigated, I think. So yeah, I think they're going to have some political problems. I think they're going to pay fines. But does that change my outlook on their profitability over the long run? They may take a hit for a quarter or two, if they get fined. But I think the long term situation, it's kind of, you go back to Microsoft. Remember, it was the Clinton administration that put the last top in the big tag in the tech wreck, at the top of the tech wreck, when he investigated Microsoft for antitrust. I think Microsoft is still in business, though. I think they're still doing okay.
Yeah, they are still in business and doing pretty well. It's interesting. Right before we came on, ISM non-manufacturing index came in at 60.3 versus a 59 estimate. And just looking at some of the components there, it was a pretty solid figure there. And that leads me to the next point of topic is FOMC meeting on Thursday.
Yeah.
It's expected that no change, but right now, I believe before these results, about 80% chance that they do hike in December. What are your thoughts? Any catalyst for Thursday to make things exciting, or non-event sort of day?
I think it's going to be a non-event kind of a day. I mean, the Fed has pretty clearly signaled that December is going to happen, unless there's, a major economic tsunami into the marketplace. If you're a Fed official right now, are you going to change because of a 10% correction or criticism because of the president? No. I mean, the economic data, as you point out, is better than it's been in 30 years. I mean, the ISM number this morning, the non-manufacturing that you point out, still the biggest part of the U.S. economy, blew away expectations. Unemployment at historic lows. The economy is working. It's working better than it has in a long time, and you can look at the Fed. Getting rates back to normal, it shouldn't impact to a large degree of what's going on in the economy. You point out the election, Tuesday, that could have a bigger impact than what the Fed does at this point. If, for example, there's an assumption that the Democrats get control of the Senate and the House, and they're going to roll back the corporate tax cut. They're going to probably kill the middle class tax cut. So you're going to be going back to higher regulations, more burdens on small businesses. So if you start moving back in that direction, then I do think that the market's going to have some problems.
Yeah, I think the interesting thing that Thursday could bring is what they actually comment. Obviously, nothing's expected for Thursday, but just to kind of if they reiterate that they're on pace for the rate hike in December, because I think there are a fair amount of people that, while the market is supposedly pricing in 80%, there are a lot of people that think they might not do it because whether it be the president or the economy, the stock market recently, things like that. And so, I mean, the things that they look at, whether it be unemployment, inflation, that, nothing has really changed their course. And so that based off of that, I kind of wouldn't expect them to do a whole lot different, which implies that them hiking in December. So
I think December's pretty much a done deal. I really do, because the economic numbers suggest that they should raise rates. And if you're worried about inflation, I can see the argument why you might not want to. Because you've had an economy that has come back from one of the worst recessions in the history of the world. It was held back for many, many years by bad policies, and now it's just getting its footing. And here's the Fed, taking away the proverbial punch bowl just as the party's really getting started. But that's the Fed's job. Now, the Fed in the past has overreacted on economic recoveries, and it's they've got political heat. Remember, it was George Bush Sr. They criticized Alan Greenspan for costing him the election by raising rates, at a time where the economy was suspect. But really, if you look at the data right now, the only thing that really seems to be soft right now is housing, and even there, we're seeing signs that could be turning around a little bit. We know that housing prices have been relatively high, but the builders have been doing very well. They're making a lot of money, so they will be finding more affordable housing in the future if they want to stay in business. So, it looks like things are really, turning the corner, and I think the world can afford, one uptick in interest rates.
Yeah, well, that's exactly what I was saying. Based on what they're looking at, it seems like they're on course. Whether they've been right, many can argue over the past 20 years that they haven't been right. At different times, but the metrics that they look at aren't as pertinent as they, things that they should be looking at. But based on what they are looking at, it seems like they are still on course to hike, and so we'll keep an eye on that. And so I think yields are actually back down a bit today, but not a whole lot. The 10-year's up 4, the bonds up 16. But we're back. The 10-year's just below 320 right here, so we're back close in yield wise, near the high of the year, especially on the short end. So if people had a problem with that and volatility picked up big time in a month ago, if that was the reason that they were saying initially is yields, we're back towards those levels, and so it'll be interesting to keep an eye on. One last thing before I get you out of here: nat gas up 7% today. Any thoughts there, or not necessarily something that you have focused on as much?
We've been focusing on it quite a bit, and it's basically the weather forecast for colder temperatures, and that's the issue. And we've talked about this before. This is one of the most strange natural gas markets you're ever going to see. I mean, because in storage right now, you have the lowest amount of supply in storage since 2005, and the injections all summer long have been below average because it's been hot. But this really comes at a time where production continues to rise, and it'll continue to rise into the end of the year. This more because of this weird dichotomy. I've been saying that natural gas prices could collapse, or they could really take off based upon the weather, and the weather is going to be the driving factor, because of the production. At some point, if we get a break in the weather, supplies will get caught up quite quickly, and we won't have to worry about the type of price spike we saw last night. But here it is, November the 5th. We're getting winter-like temperatures already. Supplies are already below normal. That's raising fears in this marketplace that we're not going to be able to keep up with the demand, even with the supply. So we have not a lot of gas in the bullpen. We have a lot of production, but if we have to go to the bullpen, it's very thin, and so right now the concern is that we're not going to be able to build up the bullpen ahead of winter if we get this early cold front, and that's why we're seeing the big price spike. I've told people this winter, we could see the price of natural gas rally $1 or $2 from here if it's cold. If we go back to this warmer weather that a lot of people were predicting for this winter, we could see natural gas plummet, by $2. So I don't think there's going to be any middle ground this winter. It's going to be dependent on the weather. And if the weather keeps coming in colder, you better watch out. I think we have a lot of upside left.
So your key comment is volatility is cheap in natural gas.
It is. It really is. I mean, in fact, a couple of weeks ago, when we were telling people, it's like, you could buy these out of the money puts and calls. We're practically giving them away. Now they're picking up a little bit after the spike, but I still think they're relatively cheap because I still think you're going to get a big move either up or down. I can't tell you which way. If I was a weatherman, I could tell you that. But, I've learned a long time ago trying to pick these long-term weather forecasts is not very good because even the experts can't get it right most of the time.
Absolutely. All right. Well, Phil, thank you very much for joining us on short notice. Phil Flynn of the Price Futures Group and Fox Business Contributor. It's going to be an interesting week. We'll definitely speak with you later on in the week, but speak to you soon. Thanks a lot.
Thank you so much.